Good morning. Today we have discussed about the management fees. This is the very important topic related to private equity, any real estate, private equity, hedge fund, whatever fund you are working. The main topic is the management fees. And we are discussing about the management fees, meaning of management means what is the impact between the management fees in balance sheet and P&L, and what is the main role in the balance management fees, a type of management fees, and so you can just little bit discuss about the calculation of the management fees. Now, before I going to discuss of the meaning of management fees, now you can simply give an example why the management fees word, why the management fees terminology is created, and what is the main purpose of the management fees. The charge GP to LP, either the GP is charged to fund. Now you see one fund name, for example ABC. This is the fund. The private equity fund is created ABC for 2000. The year of 2000 January, they have created the fund. This name is ABC. Now after GPG decided the fund name, now they searching some market, the LP. Once LP is agreed to investment here, now they start the run the business. For example, if anybody, any management or any people create some company, they need some money, the beginning of stage. How they run the money? Why they need the money? Because they hiring some people. Now they searching some office, they pay some office rent, they pay some salary, they need some money. They run this company, they need some money. Who is pay? GP is never pay that, because GP is create the company. Now they charge some amount to LP. This called as management fees. This is the management fees is starting in beginning. That word terminology is management fees. They have charged some management fees, run that company, pay some salary, pay some office rent, pay other expenses, whatever they incurred on behalf of fund. Now they charge some management fees on the LP. This is the main concept of management fees coming in the private equity. Now we can go how much management fees they charge. It is total depend upon LPA. Whenever GP and LP they both are agree, they sign some legal document, and this document they mention the charge in the management fees. Normally management fees charge 2% or 1.5% or 1%. It is depend upon the agreement or agree both parties. Now, once the LPI is signed, they decided the management fees either 2%, 1.5%, or 1%. They decided the percentage of management fees. Now they calculate the management fees in the yearly basis. For example, if one LPA is they have commitment of 10,000 and they agree to pay management fees 2%. Now they charge every month 10,000 on the behalf of 2%. And it is depend upon the book of accounting. Either they accrue the monthly, either they accrue the quarterly. It is depend of the reporting structure, how they reporting here. Now it is clear management fees normally charge 2%, 1.5%, 1%. It is total. It is total in the as per LPA how much they charge, and management fees basically in the beginning of a stage they have charged the commitment basis. Also we can discuss about the later the type of management fees. There we can explain you which basis they have charged the management fees. Now you can go here. Management fees are the fees paid to the professional interest with the managing investment on a client behalf of. Management fees can also be referred to as investment fees or advisor fees. It means GPs manage the fund. Now they charge some management fees to the LP. Basically, the meaning is that if you think about the different way, GP manage the fund, GP hiring some people, GP takes some office place, they pay all the expenses. That's why they charge the management fees. Okay, type of management fees we have discussed here. Flat management fees asset classes, flat fees and annual fees, and work fees. But we are not discuss about all the thing here. We are basically discuss about practical how they charge the management fees. Management fees charge basically three type of management fees they charge as per the commitment, as per the investment amount, and as per the asset under management and fair market value. Here we can discuss about the management fees, commitment, investment amount, or asset under management fees or fair market value. For example, one fund is started ABC. Now you know about the life cycle of the fund. The first 4 years they charge the management fees as per the commitment. For example, one LP is A, they have 10,000 commitment. Here the management fees charge and the commitment means 10,000 into 2% of the yearly basis. They charge the management fees. This is the management charge on the commitment basis of commitment. Now, after 4 years, whenever the fund is going to the completed the investment period, now when they go to the second stage of the fund, now they charge the management fees as a investment amount or AUM or fair market value. What is the investment amount? ABC1 fund, they have investment 10 portfolio. Now they are all the portfolio amount where the investment, and this basis they have charged the management. For example, they have investment of all the portfolio is 1 million. Total of the investment cost is the 1 million. Now they have charged the management fees on behalf of 1 million in depend of the percentage, either it is a 2% or 3%. It is applicable in the total LP. This is the investment amount. What is the AU or fair market value? For example, they investment in 10 portfolio. Now in the end of the quarter, now they see how much fair market value in the 10 portfolio. For example, the 10 portfolio 1.5 million the fair market value. Now they charge the management fees 2% on the 1.5 million. And they are once after the calculation of 2%, they allocated all the LP in the 1.5 million, whatever they have seen. The three basis we have calculated management fees. One is the commitment. Beginning the stage, first year to up to fourth year, they charge the management fees in the as per the fund commitment. How it depends upon the LP commitment also. Now after 4 years, they conclude the cost of investment or the fair market value. Where the investment fund, where the fund is investment, they collected all the investment the cost, then they charge the management fees. Other method they have using the management charge in the fair market value, where they are investment of the 10 portfolio, collected all the fair market value, and they charge the management fees in the fair market value. It is depend all the LP. Also, there are two terms you can using in the management fees. One is the management fees rebate. One is the management fees offset. We are not discuss about more that, but we are little bit discuss about what is the management fees offset, what is the management rebate. Management fees rebate, it is GPs provided some benefit to LP. For example, if some LPs like to investment more here, for example, our fund commitment is 100 million. For one LP coming, they have agreed to investment in the 50 million. Now the LP is demanding if the total fund commitment is 100 million, I have investment 50 million here, 50% your total fund. So what is benefit to give to me? In this case, special GP is provided management fees rebate the particular investment at the discounting method. For example, they have charged the 2% of management fees other in the on the fund. Now they told us, okay, I have charged 2% in the management fees. However, I can give discount the 0.5% on you. This is the management rebate. It is depend upon the GP, and it is depend upon the special LP who is like to investment is more in the commitment. There are a lot of point you have they provided rebate. However, this is the main point is that if a LP is investment more amount that particular fund, they have the demanding, okay, I have investment more here, what benefit I receive here. So this is the main, they have provided the rebate. Rebate is nothing, they have provided some discounting in the particular LP. This is the rebate. What is the management fees offset? Management fee offset, it is the word used. For example, in this quarter, you have charged some management fees to LP. However, where you investment some amount, you will also receive some management fees amount as a income. In this case, GP is not charge the management fees to LP. GP only told us that we are receive some management fees amount to our the portfolio. We are not return that amount to you. We are offset this amount on behalf of your management fees. For example, I give you here. Now, for example, March quarter, GP need to charge 12,000 to the management fees to LP. Now, in this quarter, fund is received their portfolio, for example, 12,000 as a income. They have written some management fees. Now, what is this? GP is informed to LP, we have offset your management fees on behalf of our portfolio income. We have received some management fees. They have returned back to us. This is the word they have using the management fees of offset. Management fees is offset is nothing. They have offset the management fees to the LP as per receive the portfolio amount. Now, the management fees, we have discussed about the journal entry. For example, in this quarter, fund is charged to the management fees amount for 10,000. What is the journal entry you need to pass in your book? Management fees account debited to management fees accrued or payable to credited. Management accounts to debited, it is the P&L part, and whatever the management fees accrued or payable, it is the balance sheet part. We are discuss about the balance sheet where I need to show you. In the P&L, you can show management fees exempted 10,000 here. For example, there are no expenses here. Total amount you have a 10,000 in the P&L. Now you can show in the balance sheet. You think about there are no asset here. Only liability you have management fees payable 10,000. Total asset minus liability is equal to 10,000. Now you can see their partner capital. For example, no contribution, no distribution in this stage. We have only retained earning of 10,000. Now asset minus liability 10,000. Your partner capital is 10,000. Now total is balance sheet as of the negative 10,000. See, balance sheet you have shown here the liability side management fees payable 10,000. Profit and loss you can show management fees expense as a 10,000. If you see here, now total P&L profit and loss account 10,000 you transfer to the return earning in the under partner capital. There are no partner capital here, no contribution, no distribution. There are no asset here. Total liability is the management 10,000. Total is the balance is showing the negative 10,000. Discuss about the theoretical. Again, I repeated the terminology of the management fees. Management fees are the fees paid to the professional interested with managing investment on a client's behalf. Management fees can also be referred to as investment fees or the advisor fees. Now you can discuss about the management fees rebate. Management fees rebate means an amount equal to the difference between the management fees on service charge and report fees determined by the purpose for that to time payable to the return of security where they have investment, they have received some amount and the set of the money to the under the management fees. Whatever the management fees offset. Management fees offset if a private equity firm generated 1 million as a management fees firm in the portfolio company firm it is fund 1 million, then be management fees firm charge also fund to 1 million would be the offset between the 1 million as the income in the management fees.